There are real concerns that the US dollar will lose its place of hegemony as the default reserve currency of the world. This has been one of the ways that the dollar has truly controlled global commerce over recent decades, and one of the things that makes America's economy so strong is that upwards of 80% of all transactions in all markets globally are anchored by US dollar prices. Now, the death of the dollar would certainly weaken the American economy. However, many cypherpunks around the world and early Bitcoin adopters have recognized that this trend was more or less inevitable, and that if not for Bitcoin, there would have been something else in the form of gold. And gold seems to be the most likely replacement, at least in the short term, for these major banks and financial organizations to be using. But in the process of the US dollar losing its hegemony over global finance, there is a huge opportunity for something like a Bitcoin, given that gold is still incredibly difficult to acquire, to transact with, and so on. The value of Bitcoin and digital currency is set to absolutely skyrocket, given that we are expecting yet another stimulus package from the US Congress, this time to the tune of upwards of $3 trillion. Even top Republicans, typically more conservative financially, are trying to push forward for a deal. Under a climate like this, scarce assets, scarce equities, property, hard assets are all set to explode as denominated in US dollar value, especially if demand for the US dollar goes down as it recedes from being viewed as the global reserve currency. I'm going to be piecing together the narrative for you that shows that this money printing is nowhere close to stopping, and in fact, it is the only bullet left for the Federal Reserve and the Treasury to fire to bring this economy back from the brink. Furthermore, I'm going to show you that this printing of money has led to an unfettered growth of the equities markets, tech stocks, and especially here in cryptocurrency. We're going to show you what some of the leading experts are saying about the Bitcoin price and its trajectory, and then we're going to talk about DeFi, the growing bubble that it's becoming, and talk about whether it's sustainable, as well as review one sweet, juicy altcoin, which I know you guys are all going to love. So if you guys are excited for this episode, do me a favor and smash that like button, turn it blue, and let's begin. According to a Goldman Sachs report released yesterday, real concerns around the longevity of the US dollar as a reserve currency have started to emerge. Unsurprisingly, their worries are tied to the coronavirus pandemic, which leaves the dollar facing the risk of political uncertainty and another spike in cases. There's also a sense that the US Federal Reserve may shift towards an inflationary bias, and that coronavirus-related debt buildup will lead to debasement fears. Goldman dubbed gold, which has rallied furiously in recent months as the currency of last resort, particularly in an environment like the current one, where governments are debasing fiat currencies and real interest rates are at all-time lows. Interest rates, what you owe for borrowing money, is at rock bottom. The actual belief in the currency, which fiat currencies are just propped up on belief, is essentially reaching a low point here, and we're seeing that with the spike in the prices of gold. Now, as we've covered before, it's almost impossible for the average person to get their hands on physical bars of gold. That has been almost entirely scarfed up by the ultra-wealthy and nation states. So, what's left for the average person is, of course, Bitcoin. Now, if you want further confirmation that this money printing is not only going to continue but potentially escalate, let's look at the attitude from the White House earlier today.
We want to work on the eviction so that people don't get evicted. You work on the payments to the people, and the rest of it, we're so far apart, we don't care. We really don't care. We want to take care of the people. The Democrats aren't taking care of the people. The payments aren't enough. The payments aren't enough. You understand that? They're not making the payments. They're not making them high enough. The Democrats are not taking care of the people. Nancy Pelosi takes care of herself, but she doesn't take care of anyone else. You look at what's going on with Schumer. So when Schumer and Pelosi can get together and take care of the people, we'll do something. In the meantime, we ought to stop eviction.
There's a pretty clear message there that Trump wants to do more, that he sees the response as not enough, and that his main concern is taking care of the people at all costs. And that, of course, makes a tremendous amount of sense, because we are in an election year. And although I'm not a big believer in polls, I know for a certain that the president is going to be watching the polls. And his response to this particular tragedy is most certainly going to be a critical aspect of the upcoming election. So print, print, print seems to be the name of the game. This is, of course, echoed by Bloomberg here in an article saying that millions more Americans will be thrown into poverty if Congress fails to enact 3 policies meant to help families get through economic hardships related to the pandemic, according to a new study by the the Urban Institute. The report finds that the poverty rate for the last 5 months of 2020 will rise to 11.9%. That's a significant increase over the projected rate of 8.9%. Essentially, if they don't print the heck out of the US dollar, millions and millions of American families are going to be thrown into poverty, and those people are going to be very upset with whoever's in power. But we know the money printer isn't stopping, and even this next bill doesn't look like it's going to be the last. All we have to do is listen to the interview conducted by Steve Mnuchin just a couple of days ago on Fox Business.
You talk about piecemeal. This will be the 5th set of legislation. So there's no reason why we can't have number 5, 6, and 7 as we need to deal with issues. And obviously, anything we need bipartisan support.
So you heard it yourself. This is the 5th piece of legislation, but there is no reason why we can't have 5, 6, and 7 as we need it. And it really doesn't sound like there's any need to stop that list. Right now, the name of the game is print our way out of the crisis. And in an environment where we're printing our way out of the crisis, it's pretty clear what the effect has been. This is, of course, the NASDAQ chart. I like to keep showing this because this is when they announced stimulus. The NASDAQ was sitting about 68.79 here, the mid 6,000s, and popped all the way up to the high 10,000s here. And we can assume, now it's sitting at near all-time high for the NASDAQ. In an economy like this, we can assume that these prices will continue to balloon as equities become the last refuge for cash becomes trash, and everybody looks to stick that free new stimulus money that we know is not going to make its way strictly to the people who need it most, and they're going to end up buying up these assets that can retain and grow in value. The similarities between the Bitcoin chart and the NASDAQ chart are undeniable, showing that Bitcoin is kind of trading like almost an extension of the NASDAQ's, like tech money, if you will, some kind of extension of Silicon Valley. I find that to be very interesting, and you can see here that there is a clear connection between stimulus policy, the stock market growth, and Bitcoin. And of course, we know that there's been a recent explosion of DeFi. A lot of people have been asking me, is this a bubble? Is this bubble set to pop? And my response is looking at the macro trend, that if we're valuing assets in US dollar value, that we are looking forward to at least another several months of unfettered growth here, because the policy of printing our way out of this is, to me, the only option they have. And if it continues, which it looks like it very well might, given the rhetoric coming out of Washington, given the rhetoric coming out of Steve Mnuchin, the rhetoric coming out of Goldman Sachs, it looks like the dollar is going to keep getting printed until there is clear evidence that we have moved past this coronavirus pandemic. That seems to be a pretty high target to hit right now. Here's a nice summary of the events that we've just outlined. Goldman, real concerns around the longevity of the US dollar as a reserve currency have started to emerge. Jason A. Williams, a hedge fund manager here in crypto land, says, do you hear that sound? The US government and Federal Reserve are going to print another 1 to 3 trillion. Look at that number, 3 trillion. It's a pretty big number. And then we have whale alert. Of course, 120 million USDT minted, meaning Tether has somehow detected that there's another 120 million worth of interest or appetite or demand for USDT. We all know that there's an uncanny correlation between the minting of USDT and the pumping of Bitcoin. So all I'm saying is the combination of these three things make it pretty clear that Bitcoin is due for another serious leg up. And in doing so, Bitcoin could bring enough excitement to really re-energize the rest of the crypto community that has not been part of the DeFi hype. Here you can see the dollar is a strong sell. Here you can see the open interest on Bitcoin futures. Again, I've told you guys this many times that Bitcoin futures is going to explode. All the derivative products are going to explode to the tune of probably 100 to 1,000x in their volumes over the coming years. Look at this increase. Look at this candle. At the end of July, the amount of futures increased from sort of hovering around this $10 billion a day mark all the way up to over $40 billion. $42.5 billion is what it looks like. That's crazy, and that's just the beginning of a very powerful trend coming to crypto land. Obviously, we all know that this is the case. This is the psychology. It's what we talked about with buying the dip yesterday, which is that people don't buy the low number. They don't buy the big red number. They like to buy the big green number. And that's the case of most people, which is why the Bitcoin bull run will attract normies like no other. We also have this meme that's been around since 2017, which is, of course, BTC at $19,821. And we have their Wolverine staring at it longingly. I think it'll be back. I think it'll be back, and it'll be back sooner than we think. But to get a sense of what the true experts are thinking here, I like to play this clip. This is, again, my guest from the other day, Krown from Krown's Crypto Cave. Obviously, some of these words he's going to use are not safe for work, so if you have sensitive ears, cover your ears. But he's going to break down what he thinks are the next immediate price targets for Bitcoin. And so if you're a trader out there, I'm going to start covering a little bit more of price action news like this, and I hope you enjoy this coverage of the Bitcoin price action right now.
I do think that short-term Bitcoin pops back up and tests around 11.2. Does Bitcoin actually close above there on a 2-hour or 4-hour? You know, this is looking more or less good. If that does happen, I'd look forward to $300 extension to 11.5. If Bitcoin can close above 11.5 on a daily, you know, would I look for immediate continuation to 12,000? Probably yes. It's just I'd really, you know, because a monthly is so close to closing just in another couple of days. For myself, I'll probably wait for that. You know, maybe I do some options plays above there. By the same token, to the downside, a little bit easier here. 10.9, a good pivot on a 2-hour or 4-hour total closure. I'd look for an extension back down to about 10.6 if that were to happen, and then a bounce there, and then come back and analyze it after that. A daily or 12-hour closure below 10.5 or 10.550, whatever this level is right here, and I'd probably be looking for returns back down to the 10.2 and 10,000 even dollar marker right here. And then this is going to look a lot more like one major fake out, getting ready for a big move to the downside. But I actually don't think that that's what's happening right now. I think that Bitcoin, you know, puts in some sideways here, maybe tests back down to 10,500 again. Although I do think that testing 10,500 to 10,600 coming into August is very, very likely. It's just, you know, timing these sorts of things is more or less going to be decided by how we act coming into the monthly closure in just a couple of days here. So, you know, you know, I can really only speak to the short term right now. The long term moves have kind of been had, at least as far as I look at it.
So big thanks to Krown. Obviously, I'll link his channel in the description of this video. If you guys enjoyed that kind of price breakdown, he does it daily. So I encourage you guys to go give him a follow. He's really, I think, one of the best in the business at this. So I encourage you to check out his content on a regular basis. There's also this clip that surfaced here with essentially Vitalik talking about how he thinks DeFi is a temporary arbitrage opportunity and that people are underestimating the risk of smart contract failure. Now, I try to say this on every single video that the actual DeFi mechanisms are babies. They're completely unproven, and that anything could happen in this market, including a total cataclysmic cascading failure. I think I've tried to make that clear on almost every single video, that these smart contracts that you're depositing funds into are not foolproof. They are not without errors, and that there is existential risk on all sides. Now, that said, in the macro environment that we're in, with the money printing, with the direct impact between stimulus on the tech stocks, Bitcoin, and cryptocurrency market caps, with there being no real other alternative unless tens of millions of people are to go into poverty, most likely losing the election for Trump for sure, I think that there is a tremendous amount of political will to keep pushing forward stimulus. Now, that stimulus, I believe, is going to create the necessary liquidity to keep this bubble going. And in the process, assets like Bitcoin, assets like gold, assets like cryptocurrency are going to show themselves as far more reliable than fiat currencies. We also had the congressional interviews with all of the biggest tech firms this morning with Jeff Bezos, Mark Zuckerberg, and a wide host of big techs, essentially having an antitrust investigation, which is aimed at the concept of whether these companies are too big and should be broken up. Now, we're seeing that centralization is under fire. Fiat currency is under fire. The status quo of our financial system is under fire. And in the process, Bitcoin and cryptocurrencies are going ballistic. I think the writing is on the wall for you to see that this trend is set to continue. And for those participating, could be a transformational wealth building event. Again, that's my opinion, not financial advice. I encourage you guys to do your own research and approach everything you do in this space with tremendous caution. Speaking of caution, we just got word that the Ledger databases on the 14th of July were actually hacked, and that a significant amount of email addresses and some actual real names and physical addresses were leaked. They're saying your payment information in crypto funds are safe, and so I guess there's no direct sort of hacking risk to your payment information, but this is yet again showing you that centralized players, any central player, even a central player who's here working in crypto land, is definitely a target, and we know that decentralization and blockchain could help fix and secure things like this from happening in the future. But just so you know, this data breach did happen, And again, even though Ledger is considered the safest wallet in the business, they are clearly not too safe to be hacked of some of their customer information. We also have this countdown going on. There's 11 minutes right now. Probably by the time I post this video, it'll be out. But this is the Cardano Shelley hard fork. So if you guys are excited about the growth of the Cardano ecosystem, smash the like button, because we're all waiting to see if old Charles Hoskinson can deliver upon his highfalutin goals for cryptocurrency and really the whole decentralized ecosystem. I've been getting asked a lot about this coin, Aleph.im, Aleph.im. It's a decentralized sort of second layer scaling solution for computation. I've heard a lot of sort of similar buzzwords to this be thrown around on a lot of projects. So yeah, it looks good to me. It's interesting. But oh my me, this thing was 1 cent just last month. In the end of June, it was a penny. And now it's pushing upwards of 50 cents. And I believe it's at all-time high right now. So people have been asking me about this coin. And yeah, it seems really interesting. It definitely seems like it could be an interesting solution, but I do not know how to justify or understand why it's having the growth that it's having. I would personally probably be waiting for a pullback because I just don't know how long this can continue. I know that they're about to release their staking nodes, and that's what everybody's trying to get their hands on these so they can get their stakes in. Like I said, I like to buy the dips. So something like this, I'll be looking for a cool off. Like even this 26 cent pullback here that happened a couple days ago, it hit that a couple times. So it's not unreasonable that this thing could have a blow off and kind of come down and test a similar range like that in the future. For me, that's going to be my strategy at getting any of this token. Right now, it's a little too hot for me to touch. They did just announce that they had a 500 million Aleph token reduction, which is essentially half their supply. So I can see why people are excited. But again, that chart is just a little bit too hot, a little bit too crazy. So anyone who's already in Aleph, congratulations. Seems like you guys have really hit the jackpot here. But, you know, if you bought in somewhere around here and you're up 50x, I would consider taking some profits. There you have it. An environment in which the US dollar is potentially looking at the end of its reign as the global reserve currency. We're looking at assets across the world that are mostly denominated in dollars. And those assets could explode in US dollar value over the coming months and years as the policy of printing seems to show no signs of stopping. Looking at the fifth bill, the fifth legislation passed by this Congress to provide stimulus in the wake of the coronavirus pandemic. And with Steve Mnuchin's words that there's no reason why 6 and 7 and we can assume 8, 9, 10 could potentially be right there after them, knowing that tens of millions of Americans could be thrust into poverty if not for those bills, if not for those emergency measures. We're also seeing a pivot towards inflationary bias at the Federal Reserve, meaning that they'll potentially let their 2% inflation target waver. How high could inflation go? 5%, 10%, maybe even more annually. We know one thing is for certain, that cash is trash, and that equities, property, hard assets like gold and Bitcoin, those are going to continually expand and grow in value under circumstances like this, where interest rates are rock bottom and the value of money is darn near negative. We can only be thankful to Satoshi that he has created such an amazing system for us to fall back on. And as the charts are showing, Bitcoin is just getting started with this new bull run. And as Bitcoin bulls to new heights, this DeFi bubble could be fueled with so many new entrants and so much new liquidity that although the bubble seems to have been already formed, there is a high likelihood that it could grow to orders of magnitude higher than it currently is today. People say the market is being irrational. But remember the quote from John Maynard Keynes, that the markets can remain irrational longer than you can remain solvent. So if you think you're going to do a big short and outsmart the market, I would encourage you to be cautious because these are unprecedented times. And the odds that we're in a Bitcoin supercycle that could bring in people across the globe who are losing faith in their government's fiat currency, who are losing faith in the policy of the Federal Reserve printing money and deciding what their money is worth, that could lead to a flourishing of the cryptocurrency and blockchain industry like we've never seen before. But as always, I'm curious what you guys think. Let me know what you think about this policy of federal stimulus, about the weakening of the US dollar, about the DeFi bubble as Vitalik has deemed it. Do you think we're still going up? Were you part of that amazing run in Aleph? Are you a bag holder? Are you planning to get some? I'm always curious what you, the community, think, and I look forward to keeping the conversation going in the comment section below. If you guys are not part of my Telegram, I encourage you guys to join the conversation in Telegram, t.me/ElioTradesCrypto. I'll leave the link in the description. We're trying to get to 1,000 members. In just a few days, we're almost at 600, so we're almost there. Definitely want to be there as I'll be announcing some very special announcements there and sharing with you more up to up-to-the-date information. Also, make sure to follow me on Twitter at ElioTrades. And of course, if you're not already subscribed to this YouTube channel, please hit that sub button and make sure you click that little bell notification. If you don't click the bell, it's like pretty much like you didn't even sub. As usual, thank you for watching. My name's ElioTrades, and I'll see you very soon on the next episode.